This topic is crucial for trading success. You will come across it many times in your trading life.
Liquidity is everywhere.
I will explain it in the most easiest way. Liquidity means money. The liquidity in the market is where stop losses and pending order exist. However, large institutions avoid focusing on areas that do not have sufficient liquidity. There are several cases of liquidity in the market. We usually see the liquidity in well-known forms such as double top and double bottom trend lines. These are well-known methods that are starting to get old. The institutions have already learned how to read the graphs like you and got away with your money. You became the liquidity and not once. Now we are in the court of the big sharks and entering into the understanding of how we profit from it. There are other types of liquidity. The type we will mainly work with is this. Usually, as traders, we wait for a position to end and at the same time expecting to see the result in liquidity. It's something that can take a minute and it also can take 1 hour. Trading has its own time. This confirms that the institution will take all the liquidity and move on. Part of trading is patient, but it has to happen as one of our rules. If no liquidity is created, the institutions may not be interested in entering a position with TAD because there is no enough money there. When there is no liquidity, we move on and do not enter the trade. When we see the liquidity accumulates there that satisfies us, we proceed to enter the trade. As you can see in these examples, all the orders you see of buyers and sellers have liquidity, especially since a series of buyers and sellers creates this very clear line. The institution have the options to buy or sell in large quantities. This means they can take all the orders, which is the liquidity, and all of the money. This is how the market goes. I wanted to show you in this chapter several examples of liquidity that you will come across during trading. This example is quite clear. The downtrend line is the easiest to see. It creates this straight line for us. It's very easy to recognize and it happens often in graphs. There are a lot of sellers and a lot of buyers who enter these transactions according to this trend line. But look what happened here now. The institution buying a big impulse, taking all the liquidity that's created in this trend line. They took all the liquidity of the sellers very quickly. Well, I'm pretty sure you've heard this example many times. It calls a double bottom. This week's that join is also liquidity. We even call it a triple bottom. We have a pretty clear line of liquidity here. And as you can see, the institution sold here in large quantities, created this big impulse candle, and took all the liquidity. In this example, we have also a triple top as in the previous example, but I wanted you to see what else is included in this chapter of liquidity. Do you see those big wicks? They are also called liquidity. And these are the wicks that we will come across quite a bit, especially in my strategy. And of course, the institution bought in large quantities, took the liquidity created here and moved on. Now I will show you an example of liquidity which we work with a lot in our strategy. I mark this week as liquidity. If the institution do take it in a big sell, I will know that the sellers have gone into action and I will prepare to go in and kind of ride on them and of course see that all of my rules work as well and enter a short position. As you can see here, it happened. I will show you another example. Of course, you can see that the sellers took this liquidity. This big wicks, of course, is also very clear liquidity. You see it repeats itself over and over again. Similar to the first section of liquidity, this chapter is also refers to liquidity taken, but this occurs before the strong impulse is broken. This is among the first indicators suggesting that they are no longer interested in staying in this area and they are moving on. On the other hand, in the first chapter I explained that the liquidity accumulates and that we are waiting for it. Here we can see it right at the beginning, not waiting for it. You have to watch it happen at the very beginning of the move. This is one of our rules. This implies that this institution took the liquidity that's accumulated there and continues in the next direction. This helps us to know more details and indicates where our supply or demand will be. Actually, it happens in the sharpest and fastest way. It is something that should be very visible without staring to see. You will learn to recognize it with time by just looking at the graphs. I will show you more examples that show this in the best way. I wanted to show you examples of different trades with a focus on liquidity. Liquidity is what drives and moves the market. I think this is one of the most important topics of all trading. Once you understand the importance of liquidity and know how to read the market correctly and recognize a valid liquidity, you will be an excellent trader. This is an example of a very easy and fast trade. I will not focus on the rules and indicators at the moment. I will focus mainly on liquidity. Feel free to watch this video as many times as you want, but you must understand this topic. So as you can see, we are in a bullish trend. It's around 10:30 in the morning. This massive break, I will mark it as a break impulse, and I will mark this boss here. Now, do you manage to identify the candle of the liquidity taken? Yes, this is the candle. As you can see, it literally took all the transactions that were down here, and then it continues to go up strongly and caused this break impulse, which broke the structure. This is our demand. Do you see what we have here? This gap is our imbalance. I want you to focus on liquidity right now, so I'll delete all the other indicators for now. Don't worry, I will show you more examples of trades later. So as you can see, I let the graph run a little. I want you to see the liquidity created while we analyze the graph. So as you can see, it is liquidity. This is also liquidity. I will mark that too. You remember that we are waiting for it to reach the half of the demand, right? Wait a minute, I will arrange the demand just to be accurate. Okay, yes, that's liquidity too. It hasn't touched the half of the demand yet. Well, now we've got another kind of clue. Double top was also created above it. We will mark him too. This shows us that the buyers will probably take that liquidity as well. So this is a good clue. We will mark that too. Now look what happened. This creates more and more liquidity for us. We will mark it as well. This is a very large piece of liquidity. This confirms to us the fact that the institution will want it. It's great for us. And as you can see, it reaches half after they took all the liquidity we marked it from before. Now we move to a lower time frame. I want to show you that liquidity is everywhere, and of course also in a lower time frame. I will show you an example here as well. Now we are waiting for a break. Look at this candle. Although it looked like a break, the break is only with wick. This is not a strong break and it's not one of our rules. So we are waiting to see a break with an impulse. Well, this is an impulse break. We will mark the liquidity taken here. We see that this candle has collected orders and then proceeded through the break. I can't find a clear demand, so I'll play with the time. I move to the 2 minutes. Yes, this is definitely a valid demand. This is the candle before the break, and also it contains quite a big wicks. It shows the war between the buyers and sellers, so I will mark it. But I just wanted to take a moment to show you this liquidity that's created here. And you can see it has a very clear line. So I place my order here from the half of the demand and I put my stop loss a little below this line. Do you see how much liquidity has been created here now? We have a very clear line of liquidity here. I put a take profit up to the highest line of the liquidity. You see that the bullish movement is very sharp. Once the institution took the liquidity, they just move on very quickly. So that's it. It was very fun and fast trade. This whole process took less than an hour. So that's it for now. I hope you all enjoyed it and have a great day, everyone. I have here an example of trade from a few days ago. It was Monday, and trust me, this is the most fun way to start the week with such a fun, successful trade. I can't wait for you to send me messages of good Monday trade shots. They will give you such a fun boost to start the week. So as you can see, we have a break to the upside, and we'll mark the liquidity taken here because you see this candle just pumped all the orders. You can see the doji candle. It shows the battle between the buyers and sellers, and that means that there is a lot of orders there. The liquidity taken say that they made a strong and fast sell, and that's how they took all the orders that were there. Then they bought very strongly, and this is actually our impulse break. Now I will show you how I combine it with all the other rules. I want to show you a kind of a small preview for the next chapters. So I now mark the imbalance created here. I write it like this, IMB, like imbalance. And that shows us where our demand will be. We will mark it. I will write it down so they will be clear to see. While we wait to reach the demand, liquidity created here. Another rule implies that the institution will come here and take this liquidity. I will mark it too. I'll just arrange it here so it will be easier to see. As you can see, we are waiting for the half of the demand to touch and then move to a smaller time frame. You can see the same process here too. Break to the upside, liquidity was taken here. We mark our demand and enter the trade from the middle. I will place my stop loss at the bottom line of these candles, and I will extend the take profit up to the liquidity we marked.